So now we're gonna make the deposit. So when I make the deposit, I'm going to go to the first tab. Now, the thing that's great about QuickBooks, it's nice, is if I hit the plus button and I go into a deposit type of form, bank deposit, the money that's in undeposited funds will be reflected here. The money that increases undeposited funds will always be either from an invoice that we have received payments from or the sales receipt, like if we're at a check register and we put that into undeposited funds. So you'll note that we have these transactions. These are the two we entered. These are the ones that were in there before. That adds up to a total of $2,562.52, which should tie out to the balance sheet and what's in undeposited funds, $2,562.52. So now if I go back on over here, I can group them together. So I'm going to put these two together and imagine that now the credit card company put them together as they actually physically put the money into my checking account. I'm going to mirror that transaction on our side so that I can match it out to what happens on the bank statement, which we might see in the bank feeds. So then if I go down, maybe there was a fee in it as well. So that would go into bank service charges. And we might say, well, what if they took out $5? Let's say $5 was removed. That means we only got $4.95, right? Because we deposited these two, 500 minus $5. What's this going to do? Increase the checking account by the $4.95. It's going to decrease undeposited funds by the 500, and it's going to record a service charge of $5. Let's go ahead and save and close it and see if that is indeed what happens into the balance sheet. We're going to run it to refresh it. And if we go into the checking account, is it going to do it this time? There it is, $4.95. I think that's the one. If I go into that one, there we have it. Boom, boom, boom. And then I'm going to close that back out. And notice it went in here in one lump sum. This is the amount that we expect to hit the bank account, which we might see from the bank feeds, at which point we're not going to use the bank feeds to record something. We're simply going to use the bank feeds to verify that this has hit the bank correctly, thereby just having a bank reconciliation function for the bank feeds. Let's go back. The other side's going to be decreasing the undeposited funds. And notice on the undeposited funds side of things, it didn't do it with one lump sum transaction, but broke it out. And that's great because now I can tick and tie the increases and the decreases, the payments and the deposits, even though they got deposited at one time. It's in here with two deposit forms, which looks a little wonky. But if I go into it, both of those amounts are in the same deposit form or were checked off at the same time at the same form. Closing this back out, going back, the other side's on the income statement, which que paso to the income statement. Let's go back in here. What happened? We're going to go 010124. I'll just do it again. 123125. Some gremlin got in here and messed up my income statement. That's okay. That's okay. I have gremlins all the time around here. They don't bother me. They do bother me. I'm lying. They bother me. But I don't let it stop me. That's what I'm talking about. Anyways, there's the $5. All right, so then let's go to the first tab again. So those are the main functions of the deposit form. Now note that if you got a deposit that didn't go through undeposited funds, then you might not need to use like this deposit form. You might enter it another way, such as, for example, if we had the bank feeds and we just waited till they cleared the bank, as we saw before, we can wait till they clear the bank and record them here. Or